What's up, everybody? Welcome to Mortgage Today for Thursday, August 10th, 2023, and oh, what a day it was. CPI day. This is the number we've been looking for quite a while to see what the Consumer Price Index comes in at, which is a big predictor on what the Fed's going to do next. MBS woke up on the right side of the bed, being up 19 basis points, and stocks were up 46 points early. The Core CPI month over month came in at 0.2 on a 0.2 forecast, and it's 0.2 previously. Core CPI year over year came in at 4.7 on a 4.8 forecast, 4.8 previously. Jobless claims came in at 248,000 on a 230 forecast. It was 227,000 previously. The annual number can miss its forecast even as the monthly number hits due to rounding. Just like last month, the monthly figure was under 0.16% before being rounded up to 0.2%. So inflation is a bit softer than the 0.2 headline suggests. Either way, bonds liked it in the morning. At least they didn't like it. You can see this CPI sub-index for shelter working its way lower, and it's almost back to pre-pandemic levels. The Fed's fear is that a pause will reignite home price appreciation, which will exacerbate the affordability problems and push inflation higher. Energy prices rose 0.2% and probably going to get worse because there's been some increases that probably aren't captured in this data. Insurance is up 2% again this month. That's 17% year over year. September Fed futures continue to increase the odds of a pause. The futures see a 10% chance of another hike in September. The odds of a rate hike by the end of the year are at 25%. We got a 30-year auction this afternoon. It was met with below average demand. Was graded a C-. Bid to cover was 2.42, was slightly below average, or slightly above average, sorry. Indirect bidders took 87.4% of the auction versus an 88% average. Today was CPI day, and bonds lost a lot of ground in the afternoon. Was CPI to blame? Probably not. CPI was pretty much in line with expectations, and bonds traded sideways for the next few hours. Then the Fed's Mary Daly said that the Fed has more work to do on inflation. Did she spook bonds? Probably not. There was a bit of weakness surrounding her comments, but yields certainly stabilized ahead of the 30-year auction. Big selling followed the 30-year auction, so was that the market mover? Probably not. That selling didn't begin until almost 20 minutes after the auction. Even then, the auction stats themselves were right in line with prevailing averages, just slightly worse. So there's no real justification the auction, never mind the fact that 7-year treasuries had a worse day than 30 years. Hard to anticipate or predict what caused the sell-off, but it did happen. In net, MBS lost 47 basis points on the day. Typo. 47 basis points on the day, mostly in the afternoon. Stocks were net flat on the day. So we closed the day at 98.61, which puts us just below these Fibonacci lines. Yeah, it just seems like they keep wanting to test and go down into this lower range, which is kind of scary for all of us because a MBS coupon being under 98 is not good for our lives. We also got a post from our sponsor at thatmakesense.com. So the number one skill of a leader is self-awareness. If you're going to lead people, you have to be aware if there is a disconnect. A leader cannot connect with the teams, or the speaker cannot connect with the audience. So you have to be able to be self-aware in order to connect with the people you want to lead. So check out the spot on that at thatmakesense.com.